Hey, good morning, good morning, good morning, everyone. How are you? Russell Moore coming to you live from dedicated to financial literacy, and a lot's going on. Lots going on. I thought I'd get on. I was sick about a couple of weeks. I actually had pneumonia. Didn't know I had it, but I was. It was a rough patch, but I'm here and I'm well. Hey, don't mind my son and all of his toys in the background. I got to talk about this real quickly. Again, this channel is basically for newbies and my friends and family and my church and stuff. So I'm just going to get right into it. I know most of you already know about it. Um, the uh, the SVB, Silicon Valley Bank, and it's insolvent. And let me just kind of explain real quickly, and I'm just going to go over this really briefly. I'm not going to give you a lot of details. So I just want just a novice person, a person that doesn't know much about the financial literacy or financial services and what is happening. Because a lot of people are panicking, and there should be an alarm. I'm not saying that you shouldn't be alarmed, but I don't think you should panic. Number one, um, Silicon Valley Bank, what they did, and here's what you need to know about banking. When you put your money in a bank, and many of you may already know this, but this is good. This is good review. When you put your money in the bank, you deposit your money. Say you got direct deposit, and your money goes from your paycheck. Your paycheck goes into your bank. When it goes into the bank, it's not like your bank just puts your money in that account and it's just sitting there. Basically, they're saying this is what you've given us, but most of that money, most of that money is already out. It's already being used, and the bank is making money on your money. So they'll get into investments, real estate, mortgages, commercial real estate, stocks, and bonds. That's what SVB did. They got off into some bonds. And here's the thing about bonds: bonds will mature, but you don't get the interest, the money for that bond until it matures. So, say you get a bond, you purchase a bond. Um, Say it's a 3 year bond, okay? It's a 3 year bond at 5%, okay? 5% interest. And that bond doesn't mature for 3 years. So it's almost like it has to go to that 3 years. Once it gets to that 3 years, then you will get that amount, that 5% of all the money that you put in there to purchase that bond. But in a situation where a bank, um, here's what happened: people started finding out that SVB was insolvent. They found out about it, and as word traveled, people started saying, "Hey, I got to go get my money." Not just people. We're talking about major companies. Let me give you a few companies that decided, because remember, they tailor to Silicon Valley startups. Roblox had 150 million. Matterford, Etsy, Roku. Roku had 25% of their cash. That's a fourth of their cash as a company in there. I don't even know how much that is. It's not reported yet how much money. Sunrun, various startups were a lot of venture capitalists, a lot of um, tech companies and biotechs, startups, people that are starting up have great ideas, innovation, but they don't have the capital, they don't have the cash. And see, in many cases, those people couldn't go to the tier one banks like J.P. Morgan or Wells Fargo, Bank of America. They would not lend them the money. So that's why these kinds of banks, these regional banks, exist, like SVB, because they'll do it, right? But they took on some risks that they shouldn't have, and it backfired. Now everybody's like, "We want my money," and then on Friday, people were going in to get their money, and then money wasn't there. So then what happened was the Federal Reserve said, at first we heard Saturday evening, even all the way up till Sunday. I wouldn't say Sunday, but Saturday evening, we heard the Federal Reserve, the government was not going to bail them out. Well, of course, there was an emergency meeting between Janet Yellen, Powell, uh, Jerome Powell, who's head over Federal Reserve, and our president. And they said, well, you know what? They came up with something. They said, you know what? We need to do something because otherwise, people are not just going to start pulling money out of that bank, but this is going to be a nationwide crisis, and what's called a bank contagion. So there was a concern that there would be a bank contagion, meaning a contagion mean what happens when something's contagious? It begins to go from one person to the next. So they were concerned that the people would go on bank runs, what they would call a bank run. In other words, people going to the bank getting all their money out, even though J.P. Morgan is not insolvent, okay? But because people do not trust our federal government, because they do not trust the banking system, they're like, you know what? Let's go get our money now. Especially small banks, regional banks, like a lot of people have their money in like smaller banks, credit unions, okay? And I would say this, not to cause people to panic. If you have your money only in a credit union, I would not do that during this season. I'm not telling you to go run and grab your money out of the credit union. I am. No, I would say, but excuse me, still got a little cough from the pneumonia bug. But here's my thinking. I felt bad because I actually was talking about this problem a week and a half ago. And when I got sick, I didn't put anything on air. I didn't do any videos on it. But me and another guy, Jeremy, I was emailing Jeremy with financial education, telling him, look, these regional banks, this could be a problem. Why are they so quiet? Why is, it seems like something's being hidden. There's some hiding going on. And let me tell you something. Watch it, and let me tell you this. Probably about 2 weeks ago, the CEO for Silicon Valley Bank sold some of his shares to the company. The CFO, about 2 weeks ago, sold some of his shares. The CMO in January and in February sold shares. Why are these top executives selling shares? They knew it. You can't tell me this wasn't insider trading. And you know what? If it was one of us, we'd be in prison. We'd be in prison. We'd go to jail. This is obviously insider trading. They knew something was going to go down. They saw it and they began to sell their shares. I think the CEO was like worth $3 million worth of his shares were sold. Get this too. Oh, this is going to really rock your world. It turns out that the CEO for Silicon Valley Bank, the CEO, was actually a director of the Federal Reserve in San Francisco. Duh. What's going on, Jerome Powell? What's happening, Federal Reserve? Did you guys know about this? Did you see this coming? All right, you guys, I don't want to just talk about the problem. Here's what I would suggest. I am not giving you financial advice, though. You still have to determine. Do your own research. Remember, what do I always say? If you don't learn, you will not earn. But I am going to say some things. I'll put it this way. These are some of the things that I've been doing. Increase your investment on gold. Increase my investment on gold. Silver. Copper. Commodities. Increase. Another thing that I've done, I'm not telling you to do this. I'm getting my money out of the banks, most of the banks. I'm not telling you to do that. I still have money in Chase. Top tier banks. I don't feel like it's time to panic with them. But I am taking a portion out. I wouldn't leave all my money, even in the top tier banks. A credit union? Sorry. I'll keep the account open, maybe leave $100 in there, but take the money out just until the storm passes. You guys, look, there's a scripture in the Bible. Let me give my peeps, my Christian peeps, a little scripture that I spoke. I quoted this about 2 weeks ago. A wise man foreseeth the evil, and he hides himself. A wise man will see something coming around the horizon, and he prepares for that. So it's not panicky to pull your money and just see what happens. Because let me tell you, here's my prediction. We've already had 2 other banks this weekend get exposed. And here's what happened when something like this happens. The federal government actually takes the bank, FDIC, Federal Depository Insurance Claim. The FDIC actually takes control of the bank. Because here's the problem. Obviously, there was no regulation. That's a whole nother video. I'll get into that. A lack of regulation. And so what's happening probably now, they know there's a lot of banks out there, regional banks that are probably insolvent. And they're probably trying to keep the lid on it and not let it get out. But I'm going to tell you, if it gets up to 10 banks, you're going to see a massive amount of people running out to get their money out of these banks. Think about it. What if your credit union is insolvent and you just don't know about it? What if that neighborhood, that bank, that private bank, that small bank that you got, that you're invested in, what if it's insolvent? They're not going to announce it, just like SVB didn't. They're not going to announce it. They're not going to say, hey, we're insolvent, come get all your money. They don't have enough. That's what happened. The people came to get their money, but the money is out. Their money wasn't there. It wasn't in the bank. It's been invested, unwisely invested. There's got to be a change in our banking system. Anyway, that's my doctor. And I got to go. But I just wanted to let you guys know. Stay tuned. I'm going to do another video on this. Have a great day. And pray, 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 pray. God's going to work it out.